We are pleased to have Deputy Secretary Adeyemo here with us this afternoon. Mr. Adeyemo has been at the forefront of economic innovation, serving in roles at the intersection of public service and financial leadership. Deputy Secretary serves as the Treasury Department's #2 official and Chief Operating Officer. With a background that includes positions in the U.S. Department of Treasury and the National Economic Council, Deputy Secretary Adeyemo has been instrumental in shaping policies that have had a major impact on the global financial landscape. We look forward to hearing his insights on the regulatory considerations and policy implications that will shape the future of the crypto industry. V. Lay, partner and head of regulatory and policy at Bain Capital Crypto, will join him on stage shortly after for a moderated discussion after his remarks. So please join me in welcoming Deputy Secretary Wally Adeyemo.
Thank you, Kristin, for that very kind introduction. And to all of you, thank you for allowing me to join you at the end of what sounds like it's been a very productive day for all of you. And as you all know better than most, innovation, is the core of America's economic success. We are by far the most important economy in the world because of the ingenuity of our entrepreneurs. From airplanes and the internet to cars and smartphones, rapid technological transformation that have reshaped how Americans not only live their lives, but imagine their lives, have been key to our success. And the thing that is special about our country in many ways is that we don't shy away from change. A constant American advantage for centuries has been not only our capacity to embrace change, but also to encourage it. Many of those of you in the room are at the forefront of such change today. It may be easy for all of you to lose sight of the scale of the change when you're immersed in it day to day, but over the last several years, the digital asset industry has grown at an exponential rate. According to the Treasury Department's Office of Financial Research, in 2021 alone, companies reported more than 2 billion transactions totaling 1.4 trillion in virtual currency transactions. That's about 4 times as many transactions and 7 times the volume of the previous year. That's why, more than a year ago at the Consensus Conference in Austin, I spoke about the tremendous opportunity digital assets present to promote innovation that helps reimagine commerce, not only in this country, but around the world. But I also made clear the importance of industry proactively taking steps to prevent digital assets from being used by transnational criminal organizations, terrorists, and rogue states. I hoped the digital asset industry would take up this call to partner with government, design new tools, and pursue new ways to protect digital assets from being abused. The tools you create will not only matter to digital assets, but will matter to the broader economy, given the impact and influence you can have. And while some of you have heeded our calls and taken steps to prevent illicit financial activity, the lack of action by too many firms, both small and large, represents a clear and present danger to our national security. Today, I'd like to focus on the steps we must now take in order to prevent bad actors from using the digital asset ecosystem for illicit activity. This is a shared responsibility, both by your industry, but also by government, one in which we have to be partners. And I want to start out by first directly addressing those in the digital asset industry who believe they are above the law. Those that also willfully turn a blind eye to the law, and those that promote assets and services that aid criminals, terrorists, and rogue states. My message is simple. We will find you, and we will hold you accountable. That's exactly what happened to Binance, as you know, the largest virtual currency exchange in the world. Over several years, Binance allowed itself to be used by the perpetrators of child sex abuse, illegal narcotics trafficking, and terrorism across more than 100,000 transactions. This included transactions done by groups like Hamas, Al-Qaeda, and ISIS. In response to this egregious activity, as all of you learned last week, Treasury announced our largest enforcement action in history for more than $4 billion. But equally important, we also placed a monitor within Binance that will have access to their systems, transactions, and accounts in order to ensure the largest virtual currency exchange in the world is no longer a permissive environment for illicit proceeds. But our challenge extends beyond exchanges to other parts of the digital asset ecosystem as well. Earlier today, the Treasury Department sanctioned Sinbad.io, a virtual currency mixer that serves as a key money laundering tool for a cyber hacking group sponsored by North Korea. Sinbad processed millions of dollars worth of virtual currency from cyber hacks and enabled cyber criminals to mask illicit transactions. Last month, Treasury announced a set of rulemakings intended to increase the transparency of mixers, making it harder for criminals and terrorists to use them to hide the sources, destination, and amount of transactions. As we develop these rules, we have requested input from stakeholders in order to make sure we prevent illicit finance while permitting responsible innovation. My view is that we can do both, but in order to accomplish this goal, we need a shared commitment both from industry and the government to work together. This action, and others to cut other money laundering mixers like Tornado Cash off from the US financial system, demonstrates that DeFi services and platforms are not above the law. Taking steps like these to reduce the abuse of these types of services is not only in the government's interest, it is in the interest of those of you in this room that seek to build an innovative industry that is on the right side of the law. It's important that we continue to tackle this problem together today so that virtual currencies do not grow into a larger illicit finance threat. As we take steps to prevent terrorist organizations, transnational criminals, and rogue states from using the traditional financial system, the last thing any of us want is for them to find new outlets in virtual currencies. There are a number of reasons why bad actors may turn to virtual currencies, but I want to highlight just two of them that many of you are very familiar with. First, illicit actors have always taken advantage of new technologies. We saw this in the last decade when ISIS used social media to revolutionize jihadist recruitment. It mastered a new platform to spread its hate-filled messages through social media companies, but ultimately, the way that we were able to reduce and mitigate this was through a partnership between industry and government that put safeguarding not only the American people, but people around the world as a key indicator of success, but for both the government and for the industry. Second, we know that risk tends to migrate to places where global regulation and enforcement are less well developed. As rogue states and terrorist groups find it harder to use the traditional financial system to move money, it will only be logical they will turn to less regulated ways to move assets. This is exactly what we're seeing with states like North Korea and groups like Hamas, as they do this already. The North Korea regime, as many of you already know, accrues a great deal of its resources from cyber criminal activity, including stealing virtual currency. Its preferred means for moving its ill-gotten gains is through the digital asset ecosystem rather than the traditional financial system. Our concern is that as Hamas is dislodged from Gaza and no longer able to extort and tax innocent Palestinians, it will increasingly use the digital asset ecosystem to try and move its assets. These are just a couple of examples of the risk we face today. A digital asset ecosystem that lacks a shared commitment to prevent illicit finance provides ample opportunities for groups like North Korea and Hamas to move resources in ways that are intended to undermine our efforts to stop them. But in order to address these challenges, we need a shared commitment, as I've mentioned already in my remarks. And when I talk about a shared commitment, I mean the digital asset industry and government working together hand in hand to cut off illicit actors before they're able to spread roots and to use digital assets as a platform. At Consensus in 2022, I explained that our goal is to empower industry participants to do the right thing by building a responsible, compliant, and accountable digital asset ecosystem. That means companies need to be proactive in identifying risks, establishing standards and protocols to mitigate those risks, and isolating bad actors. a shared commitment requires action from industry collectively. Today, government and the traditional financial sector work in partnership in many ways to prevent the movement of illicit proceeds. We've built a regulatory framework that traditional financial firms not only adhere to, but help to implement. These firms have invested in tools, personnel, and processes that help us identify and capture criminals, terrorists, and others that seek to move money illegally. Just this week, the CEO of the American Bankers Association highlighted ongoing work to design, develop, and pilot new information sharing exchanges, which the ABA will manage, that focuses on combating fraud, money laundering, and financial and terrorist financing. This type of collaboration and proactive effort amongst industry participants, both large and small, is commendable and demonstrates the collective commitment that is necessary today by this industry as well. We need those in the digital asset industry to take many of the steps that have been taken by the traditional financial sector to help protect your industry from the threat of illicit actors. You have the capacity to build new tools that help prevent money laundering while continuing to provide legitimate protections to individuals. The tools you build will not only be helpful to your industry, but will be helpful to global commerce in helping us prevent illicit actors from taking advantage of trade-based illicit financial flows and many other types of illicit activity that goes on in the world. You also have the capacity to cut off firms from your ecosystem that are failing to take steps to prevent illicit finance. My fear is that without action by your industry, increased movement of illicit proceeds into the digital asset ecosystem will force us to restrict, restrain, and cut off elements of the digital asset ecosystem from the broader economy. Our actions over the last year send a clear message. We will not hesitate to bring to bear all the tools the government has to go after those that threaten our national security. Yesterday, Treasury provided Congress a set of common sense recommendations to expand our authorities and broaden our tools and resources to go after illicit actors in the digital asset space. First, we're pursuing the creation of a new sanctions tool targeted towards actors in the digital asset ecosystem that allow terrorist groups and other illicit actors to move their assets. We're calling on Congress to create a secondary sanctions regime that will not only cut off a firm from the U.S. financial system, but will also expose any firm that continues to do business with the sanctioned entity to being cut off from the U.S. financial system as well. This is a significant tool. We do not make this request lightly, but we need to do everything in our power to make sure that groups like Hamas are not able to find safe haven within the digital asset ecosystem. Second, we need to update our illicit finance authorities to match the challenges we face today, including those presented by the evolving digital asset ecosystem. For example, we cannot rely on statutory definitions that are decades old to address the illicit finance risk we face in 2023. We cannot allow dollar-backed stablecoin providers outside the United States to have the privilege of using our currency without the responsibility of putting in place procedures to prevent terrorists from abusing their platforms. And we cannot permit offshore financial service providers to use jurisdiction evasion tactics to avoid complying with our laws. We're working to close these gaps, and we look forward to doing so with those in your industry who are interested in responsible innovation. Finally, in addition to working with Congress in order to make sure that companies are working on a level playing field, we're committed to working with the Financial Action Task Force to make sure our allies and partners around the world join us in updating their regulatory approach. The last time we pursued major reforms to this architecture was after the terrorist attacks of 9/11. The threat actors and tools at their disposal have changed since then, but as we all know, their goals have not. As terrorists and criminals innovate their approach to illicit finance, we need tools to be able to keep up with them. These reforms will not only help curb illicit finance, but they will also level the playing field for actors pursuing responsible innovation in your industry. That's why we think that they are the type of reforms that will help build out a sustainable digital asset industry over time. For those in the industry skeptical that digital asset industry can grow if regulated, remember that the seat belt and airbag did not squelch Henry Ford's innovation. They simply protected people and helped to foster an environment where the automobile industry could enjoy sustainable growth. A regulatory environment that stops terrorists, criminal organizations, and rogue states from using virtual currencies to move their assets can also help legitimate firms thrive in the long term. I know that this is an important piece of a conversation that we have been having for a long time in terms of how best to promote responsible innovation, and we look forward to continuing that conversation with your industry and with Congress in order to make sure that the digital asset ecosystem is one that creates real value, not only for the American people, but for people around the world. And I look forward to the conversation with V and the conversation with all of you. Thank you very much.
Thank you so much, Deputy Secretary, for those remarks and for being brave enough to come here today. No, but I mean, I think this sort of open dialogue is really important when you're talking about a technology and an asset class that isn't just new, but evolving very rapidly. So public-private sector engagement is important, and so we appreciate you taking the time. That said, we do have some questions and I think concerns. I want to talk about Treasury's approach to the industry more generally, but I wanted to start off by asking you about some of the recommendations or options that you presented to Congress yesterday. Okay, so first, one of the options you presented would define things like DeFi services, self-hosted wallets, and even validator nodes as financial institutions under the Bank Secrecy Act, and they would be subject to the same KYC, AML, counterterrorist financing requirements that banks and other financial institutions currently are. But these things aren't financial intermediaries in the traditional sense, right? A lot of times they're just software or infrastructure that don't have the ability to collect or report that kind of information. So it would necessarily require some level of intermediation. So my question for you is the ultimate goal here to basically ban non-intermediated transactions, financial transactions between individuals, including ones that are entirely self-directed?
No, I think the thing that we're trying to do is promote responsible innovation. And I think one of the things that we've appreciated the most about this industry is the fact that you have been able to innovate and come up with new tools to address challenges. And I think one of the challenges that we face today is that some within the ecosystem are building some tools that are intended to allow terrorists, criminals, and others who seek to avoid government detection to do so. And what we're hoping is that by starting a conversation about legislation and how the digital asset ecosystem fits within the Bank Secrecy Act, it allows us to both design the tools to prevent those organizations from being able to do that, but also creates incentives for those in your industry that are innovating to build new tools that allow you to provide KYC, that while also providing privacy protections to individuals. But I don't think this should not be read as us trying to squelch an industry. Look at what we did on Binance, for example. With Binance, we leveled the largest fine that we've ever put in place, and they are moving out of the US jurisdiction. But what we did was we placed a monitor there because we wanted to allow Binance to continue to operate as long as they were able to operate in a way that was consistent with protecting our national security, and that's what our overarching aim is here. We're happy to have a dialogue in terms of how we can do that, consistent with the fact that the innovation that exists today, the tools that you've mentioned, V, today, will change over time. There'll be new tools and new approaches, and we want to build a regulatory approach that's flexible enough to deal with those. And if that means that we need to think differently about how we regulate those, we're open to that conversation. But I think the thing we're not open to is the idea that you can create something that is outside of the regulatory architecture that threatens our national security.
Yeah, so the current Bank Secrecy Act, right, like you said, it was updated, maybe not in a major way in 2020, but yes, no major changes since the Patriot Act. Do you feel like the tools that Treasury has at its disposal now are really insufficient? I mean, like you mentioned, right, you just brought an enforcement action against Binance for, to the extent that it was facilitating this kind of illicit activity. You've sanctioned a number of centralized exchanges, and you brought actions, against Tornado Cash and other centralized and decentralized mixers. Why do you think you need additional authorities? I mean, it seems to me like those steps have been really effective.
The thing that I learned most from being at Treasury during the financial crisis is that innovation can outpace regulation in ways that create risk for not only the broader economy, but for our national security. And this is a place where a great deal of innovation is happening. My view is that the digital asset ecosystem will look very different 5, 10 years from now. So our goal is to make sure that we have the flexibility in terms of tools to be able to address that. You're right, we do have a number of strong tools today to deal with it, with the ecosystem as it exists today, but I'm increasingly concerned about things like dollar-based stablecoins that aren't based here in the United States, but give people the privilege and the ability to use the dollar outside of our jurisdiction, including these groups that threaten our national security, without the responsibility of following our regulations, and what threat that creates not only to our national security, but to the national security of our allies and partners. I don't think the solution is only going to be taking actions here in the United States. Part of our goal is always to, as we think about building new authorities here in the United States, to internationalize them for 2 reasons. One is to make sure there's a level playing field for US firms, but 2, because we don't want the threats that we face to simply migrate to other parts of the world. So a big part of our goal is not just to act here and to get Congress to act alongside us, but to do it with our allies and partners around the world. And ultimately, if when you look at the proposal we've put forward, you have different ideas, we're open to those as well. But I think the thing we're unwilling to do is to live in a world where what is said is that, well, there are parts of this ecosystem that in no way should ever be regulated, and we're fine with the idea that that means that illicit activity will flow to those because that's just the way the ecosystem's being set up.
So on the question of dollar-backed stablecoins. So one of the other recommendations that you submitted to Congress yesterday asks for extraterritorial authority over U.S. dollar-backed stablecoins, even those that are issued by foreign entities on foreign soil with no U.S. touch points at all. But as you know, we're already seeing a rise in the use of non-U.S. dollar-backed stablecoins like China's digital yuan, to settle international transactions, including with countries like Russia. So wouldn't something like this just accelerate that trend, moving away from US dollar-backed stablecoins and undercutting the US dollar as the world's reserve currency, which would actually potentially make our sanctions regime less effective?
No, I don't believe that for a second. And part of the reason I don't believe that is that what I spend my days doing and nights doing is thinking about how to protect the US economy. And fundamentally, one of the places that I do that against is Russia. And that started in 2014 when the Russians invaded Crimea, and we took a number of sanctions actions. And what the Russians decided to do at that point was to try and get as far away from the dollar as possible. They moved their assets out of the United States. They tried to build an economy that was protected from the dollar. And then in 2022, when they decided that they were going to re-invade Ukraine and to go further, we decided to take a number of actions. And as my team provided me with the data of what Russia had done to try and protect themselves, we found that on 80% of transactions that Russian banks were doing, the dollar was still on one side of it. Because it's really hard to get away from the dollar because of the depth and breadth of our capital markets, but also because of the strength of our economy. So I think I'm less concerned about stable coins developing that are not dollar-based. You mentioned the RMB. Ultimately, it's not a convertible currency. If you have a lot of RMB, you can buy a lot of things in China, but it's really hard to buy a lot of things anywhere else. Ultimately, the convertible currencies that exist in the world are here in the United States and amongst our allies and partners in the G7 and around the world. And part of our goal is to make sure that not only we take the steps that have been outlined in the proposals we send to Congress, but we work to internationalize them, to have conversations with the countries that have deep and liquid capital markets and have the type of currencies that people want to hold, to make sure they're taking similar steps, because ultimately they face the same threats that we do from either dollar-backed stablecoins, yen-backed stablecoins, pound-backed stablecoins, and that we built a regulatory regime that allows for responsible innovation, but prevents the types of abuses that no one in this room wants.
Have you been paying attention at all to, China's been pushing the use of its digital yuan as part of its Belt and Roads initiative. Is that something you're concerned about?
No. I don't think it's been very successful. If you look at any of the data related to the use of the RMB, it's still minuscule in comparison to the use of the dollar. But the way I like to think about this is not just the use of the dollar, but I think about the use of the currencies related to the G7 countries. And when you look at that, it's even smaller. So ultimately, I think that there may be some bilateral trade that's happening in RMB with China, but until China makes certain decisions about opening up its capital market, about freely floating the RMB, it's very hard to see countries making a decision that they're going to use the RMB rather than the dollar or any of these other currencies.
So what do you say to those who would argue that euro dollars, as you know, are outside of the jurisdiction of the U.S. government? One way to look at dollar-backed stablecoins that are issued and operated by foreign entities is that it's really just the euro dollar. So it feels like this is targeting the technology.
I think one of the things, I think you bring up a good example, which is the euro dollar. And I think one of the keys to the development of the euro dollar market is a shared approach to some of our regulatory environments, including the regulation of illicit finance between our jurisdictions. So I don't think this should be seen as targeting the technology. It's really targeting a gap within the regulatory environment. And we'd be happy to, as we think through the regulation here, for jurisdictions that put in place similar regulatory environments to the one we have here in the United States, to look at granting them an exception from our regulation. The problem we have, and this is often something that members of your industry raise with me, is that, well, if in the United States you take this action, then all of this behavior is going to migrate to other countries. So the way that we solve for that is we're saying that if those countries aren't willing to put in place regulations to address these challenges, especially when it comes to dollar-based stablecoins, then we're going to get authority from Congress to go after them as well. But our first preference is always to have countries put in place regulatory approaches that are similar to the ones here in the United States, because not only is that in the best interest of their citizens in terms of protecting them, but it also protects our country as well. So I think from our standpoint, if a country outside of the United States, be it our allies and partners in Europe or anywhere in the world, were willing to put in place a regulatory environment that was similar, we would then have no issue with allowing that regulatory environment to stand in place of the one we're building here. So that's something we're willing to work with Congress on as they think about this legislation.
So some of the recommendations, that seek to basically expand the Bank Secrecy Act abroad, there seems to be an assumption in there that maybe the FATF standards are not sufficient. Can you tell us how you see those two interacting?
I think part of, and I'll go back to what we did after the global financial crisis, part of what we did in the United States was we passed Dodd-Frank, and then we went through an effort working with other regulators and with the Basel Committee to update the standards globally. So our goal here is both to look to FATF and use those as standards that we think every country should implement. But over time, as you innovate, we need to be innovative in terms of our regulatory approach. I think the question I would put to all of you is that what are you going to be for in terms of a regulatory approach when it comes to illicit finance? Because what exists today doesn't work. When the largest crypto exchange has over 100,000 transactions that were being done by groups like Hamas and other illicit actors, clearly what is happening now doesn't work. I mentioned what the ABA is doing and what other banking associations are doing. While you may be different, I do think that industry needs to step up and to take steps here to think through what you are for in terms of making sure that you help work with government to prevent illicit finance, because oftentimes what I hear is that the rules currently are unclear, too hard to understand how they apply to us. And I think the thing that I'm asking is we're open to working with you. We're open to talking to you about what we can do together. But what we're not open to is the idea that the law should not apply to us, because That doesn't work for you, I think, in terms of building an industry that is going to be respected and one in which you're going to get capital flowing. It doesn't work from us from the standpoint of protecting our national security.
Yeah, so I guess I would flip that around and ask, how much does Treasury think about the flaws in the current KYC, AML compliance, CTF compliance regime, right? As you know, it requires financial institutions to collect a lot of personal, sensitive information on individuals, which also presents a security concern. And there are serious questions about how effective this regime actually is, right? Some studies show that it catches only a small fraction of illicit finance. So, is Treasury continually evaluating that? And then, to your point about industry working on tools, that is an area that the industry is really actively researching and investing in, right? Things, alternatives to compliance that are more privacy preserving, better for security. Things like zero knowledge cryptography, homomorphic encryption, multi-party computation. But I think part of the issue is that some of these are really, really hard computer science problems that folks are trying to solve, and it takes time, but could potentially be, a superior alternative. My concern, though, right, is that in the meantime, trying to force a lot of these technologies and services into the legacy frameworks is going to shut down a lot of that R&D and drive it offshore. And that has implications, for our economic competitiveness, national security concerns. So how much do you think about that?
I think we think about the Bank Secrecy Act and things like know your customer standards a great deal. And one of the things that I've been encouraged by is the innovation that's happening in the digital asset space in terms of some of the things that you mentioned. And what we want to do is encourage that. And we think that by demonstrating where the world is going in terms of us building a regulatory regime that's going to require more of that from this industry, it'll hopefully encourage firms like your own to make greater investments there. I think you're right, they're very hard problems to solve, but I was recently in the Bay Area with a company that is working on AI solutions that are going to help financial institutions massively improve their ability to do KYC and also review transactions for AML violations. I think we're open to the idea of thinking about ways in which we can rethink regulation in light of innovation. But in addition to that, one of the things that we've been encouraged by is the amount of capital that's flowing towards new solutions to dealing with AML. I think both are needed, and we're open to having a conversation about it. But I think the thing that I worry about is that we can't end up in a place where we're allowing for an innovative environment that then is being abused by criminals, terrorists, and rogue states. So while we want to encourage innovation, and we want to do it in a responsible way that protects our national security. And I know that oftentimes the argument is made that much of this innovation is going to go offshore. What we want to do is also make sure that we're working to build a global level playing field where not only is the regulatory environment here in the United States one that that is clear, that is certain, but that we're building a similar environment globally so that firms that decide to headquarter here in the United States are not ill-prepared. But one of the things we've also found is that you look at Binance, even if you are located offshore, ultimately, given the size and the importance of the U.S. economy, you're going to have customers here. You're in some way going to have touch points in the United States for the most part. And when you have that, then you do have duties and obligations here in the United States as well.
Can we talk about privacy? So yes. By default, right, transactions on the blockchain are public, they're traceable, and immutable, which, as you know, can make them very useful in government investigations and prosecutions, asset recovery, and in the case of some stablecoins, even asset seizures. But as you yourself have acknowledged in the past, individuals may have a need to transact privately on the blockchain for things like humanitarian aid, for instance. And in the traditional financial system, a person's financial transactions are private by default. How do you balance these legitimate privacy interests with Treasury's desire to be able to track crypto activity to combat illicit finance?
Yeah, and I think to your point, I don't know that our interests are any different in the digital asset space than they are in the traditional banking space. I think the difference is that there are a number of tools in the digital asset space that may not think of themselves as financial institutions or part of the financial ecosystem. I think from our standpoint, what we're attempting to accomplish is the same. We want to be in a position where we can say that as we take steps to try and limit the ability of terrorists, criminals, and others to use the traditional financial system to try and move their assets, they don't think that they have the ability to do so using some of the tools like mixers that are built to help with money laundering or others to do so in the digital asset space. But to your point, many of the tools that are being created in the digital asset space are actually far better in terms of the ability for us to know your customer, to track where money is going. And that's why I think that ultimately many of the things we're proposing here are beneficial to those parts of this ecosystem, because it allows you to know that you're separating those people who have a means of doing this from those who don't. Ultimately, we think that people should be able to enjoy their privacy, but that does not mean that terrorists and criminals should also be able to use the guise of privacy as a means to move their money. We've been able to find that balance when it comes to traditional financial institutions. I think that's possible also in the digital asset space. It will require us to work together, but it also is going to require additional innovation. A lot of that innovation is already happening. To your point, some of the math problems that are trying to be solved are very difficult and very hard, but I think one of the things that has been encouraging to me is that this is an industry that solves a lot of hard problems very quickly.
So as you know, much of the crypto that's laundered by illicit actors is obtained through hacks. How much is Treasury focused on cybersecurity, basically getting to the root of all of this illicit activity, and with partnering with the crypto industry to build out a more robust cyber regime?
I would like to partner more with the industry, frankly, on cybersecurity, because it matters a great deal to me. One of the things that I'm charged with by Secretary Yellen is thinking about cybersecurity when it comes to the financial industry at large. And I spend a great deal of time with traditional financial institutions thinking about how we can best build protections against cyber actors who are looking to steal, infiltrate, or abuse their systems. And I think we need to do more with the industry in partnership to try and make sure that we're building those protections. And what we find is that be it rogue states, be it criminals, be it others, their goal is to try and steal money or steal things they can turn into money from those people who have them. The other thing that we found, though, is that as you look at those people who are conducting ransomware attacks, the way they want to be paid is in cryptocurrencies. And part of what we need your help with is trying to go after those people who are trying to be paid in cryptocurrencies, because the more we can do to make it harder for them to get access to fiat currency or cryptocurrency, it in lots of ways helps to reduce their incentives to go and conduct these ransomware attacks. So I think we are very interested in partnering more with industry with regard to helping to provide the type of cybersecurity protections that will be needed to stop people and rogue states from being able to steal cyber or cryptocurrencies. But we also need your help thinking through what can we do to make sure that cyber criminals who are conducting these ransomware attacks don't think about cryptocurrency as the means of being paid because they think it's the best way for them to get that money and hide it from the broader global economy.
So you've referred in remarks recently about the importance of self-regulation, the industry taking steps to regulate itself. I know in the DeFi risk assessment that was issued earlier this year, one of the recommendations was maybe the industry can put out standards for better cybersecurity to this point. Are there other steps that you think we can take that would be helpful?
So I think cybersecurity is top of my mind, given the risk that presents not only to your industry but to the broader economy. But I think the other place for me is when it comes to illicit finance. This is a threat, I think, to all of us. It's not something that even the most ardent advocate of privacy to anyone in the industry, does not want the industry to be used for illicit finance. And I think the industry itself coming forward and saying, here are some standards that we want to live up to. These are the things that we're going to require people to do, or we're going to ask people to do, I think is a helpful place to start. And it's also a conversation that we're willing to engage in. So I think those are helpful areas. And then I think the third one is, for me, very important, which is thinking about financial inclusion. I think that this is a place where there's a great deal of promise in terms of what this industry can do in order to bring the billion people who aren't engaged in the global financial system into that financial system. I think doing that in a way that's consistent with the regulatory approaches around the world is hard, but you have the ability, you are building tools that could be helpful in that area.
Yeah, I mean, over 1 billion people around the world lack government-issued ID, right? So I think to your point about inclusion, I mean, that presents a huge problem if we're simply going to continue to apply the existing KYC AML compliance regime that we have here and around the world. So I think, you know, I'm sure Treasury is thinking about that, but, you know, I assume you have an interest in making sure that as many people as possible have access to the new digital economy.
I have a very both professional and personal interest in it. And I think the thing that is important to us is that, you know, we've seen innovation happen in places like India, where they've brought hundreds of millions of people into the financial system using alternative means of identification. But I think there are going to be new and potential better ways to do this around the world, and I'm hoping that this industry can lead the way. We, of course, also worry about consumer protections, a number of things related to people getting their financial services through non-traditional financial means. But these are issues that we can solve working together. But I think while I think my message today was that we're worried about the risk, the reason I'm here is because we think that we can address these risks in partnership. And the key for us is to make sure that we build that strong partnership now at a moment where this industry is still innovating and there's a great deal of innovation happening. Building into that innovation the idea of a regulatory architecture that makes sense, I think is helpful to the industry in terms of promoting its advancement. And I look forward to continuing that partnership with all of you.
Thank you so much for being here today.